Well, Niva Bupa Health Insurance is a fairly recently listed company, reported third quarter numbers, and they do look weak. Let's talk about what happened with Krishnan Ramachandran, MD and CEO at Niva Bupa Health Insurance, who's with us. Mr. Ramachandran, good to have you with us here. Thank you very much for your time. Prashant, this side. You know, these numbers do look weak, sir, you'd agree. Underwriting losses are up 41%, operating profits are down 70%. A combined ratio went up 800 basis points. What went wrong? And is this a one-off? And what can you tell us about the future?
So, Prashant, firstly, thank you very much for having me on your show. I just want to place our numbers in context because there was an accounting change made, in Q3. And on a like-to-like basis, just to give you some headline numbers, our growth over 9 months last year was 30.2%. Again, on a like-to-like basis, our combined ratio is actually 100.9%, compared to last year. So, and also on an IFRS basis, which we believe is the right way to economically assess our business, and this is the accounting standard that India will move to. Our profit after tax, is 119.5 crores. On an Indian GAAP basis as well, our profit after tax 9 months was 7.4 crores compared to a significant loss, 9 months last year. So our financial performance has actually improved, Prashant, and significantly improved, compared to last year.
Okay. So you're saying this is essentially the accounting change impact. Some of the numbers.
Yeah, even with the accounting change, for example, 9 months last year, we had a loss of 75.2 crores, which has improved to a profit of 7.4 crores 9 months this year. And this is with the accounting change fully baked in. So, my point is that on a like-to-like basis, our combined ratio has actually improved. And our profit, even with the accounting change, has actually significantly improved this year compared to last year.
Okay. Mr. Ramachandran, you've been growing. Let's just look at Niva compared to the industry. I mean, your growth has been about 10-15% higher than standalone health insurance industry. I mean, if you take an average there, do you expect this to continue in 26 as well? And at what point would normalized growth kick in line with the industry? How much more runway do you have?
No, look, frankly, Prashant, if you look at the health insurance opportunity in India, what policymakers, what the regulator, and indeed what the industry aspires for, which is insurance for all, I think the runway for growth, frankly, is there for any foreseeable future. It's really a question of, and as you know, this is a capital-intensive business. It's really a question of what continued level of investments, we choose to make in capitalizing on the opportunity. We as a management team definitely want to grow significantly faster than market, but at the same time, balance that with profitability. So we believe that we will grow, at least 10 points faster than market for the foreseeable future, while making sure that we are balancing that with profitability and with the right operating metrics, as you alluded to. To reiterate, 9 months this financial year, our financial performance has been significantly better than 9 months last financial year, Prashant.
All right. Hi, sir. Good morning. Good to see you, Ben. So the market seemed to be taking your point on board as well. At prima facie, these numbers look disappointing. But you're clarifying and it explains why the stock actually is opening up a little bit higher in pre-open. That said, could you tell us where do you see your gross premium moving to by the end, say, of FY26 and early FY27? If you have an absolute number that you're targeting, as you're saying, you're going to grow faster than the industry, but an absolute number, 10,000 crores or thereabouts?
Yeah, we see ourselves, if I said the market is going to grow at a CAGR of 15%, we do see ourselves growing 8 to 10% faster than market. So, you can extrapolate what the numbers will be. This is a, CAGR over a 5-year period. So that's where we foresee our growth trajectory to be.
Okay. Got that. Your expenses of management ratio for the 9-month ended FY25 is about 40.5%. You would ask for some time from the regulator to comply with the limit of 35%. Has IRDAI approved the request? By when will you be able to comply with the EOM limit?
So, Prashant, our expense of management as of 9 months FY25 is 39%. What you're referring to is the is the expense ratio, not the expense of management ratio. There's a slight difference between those two in terms of the denominator. So our EOM ratio, which is what the regulator monitors, is 39%. That's improved from 39.5% last year. In terms of the glide path that the board approved plan that we have submitted to the regulator, where we need to comply to 35% plus allowances, we're very much on track to achieve that glide path.
By when, sir?
FY26, Prashant.
Okay. This year, basically, right?
No, next year.
Next year. I mean, we're almost there. So.
Yeah.
All right. Now, the GST Council will soon consider the group of ministers' recommendation of rationalization of GST on health insurance. How important would be the treatment to input tax credit, and what rate would be optimum if benefits have to be passed on to policyholders, sir?
I think the input tax credit is critical, and as an industry, we've done our analysis, and we believe that lowering GST to 12% means that we will be able to pass on the entire benefit of GST reduction, to consumers. If it is 5%, I think the important thing is to make sure that ITC is maintained at a principal level. There'll be some pluses and minuses, but to a very large extent there as well. We'll be able to pass on the benefit. But the important thing is to preserve the input tax benefit, in whatever change the government wants to make on GST, Prashant. That's number one. Number two, we do firmly believe, it is important, affordability on health insurance is important, especially given healthcare inflation and how healthcare costs are trending in our country. So any lowering of GST with input tax credit will be beneficial to the Indian consumer.
Okay. I think the market is hearing those comments loud and clear. Mr. Ramachandran, stocks up 7%, and we're just sort of in the pre-open, that is at the end of the pre-open, there's a 6 rupee bump up, and we are hitting market open now. I had a couple of more questions, but we're sort of running into market open. We leave it there, Mr. Ramachandran, for today. Thank you very much for explaining all of that to our viewers, and we'll speak again soon. So that is Niva Bupa, which is indicating a higher open.